love it. Cool. So let's get into how to pitch a novation agreement. So I'm a seller, you're the investor, and I want higher than a wholesale offer. So let's say that I want 500,000 for the property. How? And let's say that didn't meet your buy box for a wholesale deal. How would you present the novation in a situation?
This is a big one where they'll say, well, I just want to sell it as is. Now, remember, because we did another interview where I talked about the ideal novation property is in really good condition. That's quite frankly what makes it not a good wholesale. But why do they want to sell as is?
Hi everybody, Jose Luis Morales here. Welcome back to another episode of the Morales Group Show. Today we have a repeat guest. His name is Eric Brewer. He is the CEO of Integrity First Home Buyers out of Pennsylvania. And today he is going to go over with us how to pitch a novation agreement. So we're actually going to be doing a live role play. If you're in a situation where a novation agreement may be the adequate solution, we're going to be going over step by step as to how to pitch it. Eric, for our viewers that don't know who you are, who is Eric Brewer? And then how did you get involved in real estate investing?
Yeah, thanks for having me today. It's a good question. It's always cool to kind of revisit how I got started and where I came from. It's always a subtle reminder of how blessed I've been over the 17 years that I've been in real estate. But I got started in real estate back in 2006, made a transition from the car business, and kind of got burned out of being in the automobile industry. The hours, the demand, just sort of the dynamics between dealership and consumer has its way of taking some joy out of your life, right? I was just kind of tired of getting beat up by people over $300 and some floor mats selling cars, and I thought there was going to potentially be something better for me or different for me. Just started looking around and ended up in real estate, and got started in 2006. Had a crazy ride till 2008. Had an even crazier ride through 2008 to 2012, just fighting for my life. And flash forward to today, we operate in 3 different markets in Pennsylvania, Maryland, and then we do some nationwide deals as well with a lot of the folks that I net worth, mastermind with, or have taught novations to. So we do deals all across the country now. It's a very small portion of our volume, but still I think deserves to be mentioned. We have just over 40 employees. A full executive leadership team. So I generally don't have much to do with the day-to-day anymore. I spend most of my time networking, masterminding, trying to figure out what's next for me, what's next for the company 5 or 10 years down the road. So that's a little snapshot of who I am. I have a beautiful family. I have a wife that I've been with for over a decade and 6 beautiful children. The oldest is 19. The youngest turned 4 months yesterday, so I have a pretty broad range of responsibilities when it comes to children. And then in the middle of those 2 boys that are 19 and 4 months, I have 4 daughters that are no more than about 18 months apart for each of those 4. So it's like 9, 7, 5, and 3 years old with those daughters. So I have a feeling I may actually grow hair because I'll be so stressed in about 10 years when these girls get into high school and middle school. So just think of me and pray for me because I got my hands full, I think, in a couple of years when these girls get into middle school.
It's funny because the age difference, it's all gonna happen like back to back to back, pretty much. So
yeah, that's exactly what I'm worried about. Yeah, that's precise. There's no way of avoiding that. That's exactly how that's going to happen.
I love it. Cool. So let's get into how to pitch a novation agreement. So I'm a seller, you're the investor, and I want higher than a wholesale offer. So let's say that I want 500,000 for the property. How? And let's say that didn't meet your buy box for a wholesale deal. How would you present the novation in a situation like that?
Yeah, so it's crazy. I get this question all the time. I think it's great that you're asking this and then putting this out there for people to be able to use as a tool. And I want to start with there's 2 ways I can answer this question. There's like the process, we'll say, right, of the mechanics of how you should present it. But then there's also a process that precedes us getting to this point. So like you said, they don't want a wholesale offer. One of the mistakes that a lot of people do when they're pitching a novation offer is they skip the process of physically making the wholesale offer first. They'll go, oh, this house is too nice. The guy told me he wants 400. He's not in a hurry to move. I'm just going to go right to pitching a novation. And then they go, well, Jose, I could list it for you. That's wrong. Don't say that ever. We actually have worked really hard on language in our pitch, and we don't say listing. We don't say MLS. We say, would you be willing to work with me and give me permission to take it to the open market? We don't say showings. We say reasonable access, right? So that's where I'm talking about the mechanics and the pitch of it. But let's go back, and I'll actually kind of walk you through how the pitch happens. But it's very important that the pitch, the nuts and bolts of it, I'm going to give to you today. But the middle part that you fill in needs to be information that you were able to gather through meaningful dialogue throughout what should have been a sales process leading up to this point. Like, Jose, what's even got you thinking about maybe selling? Well, I have this opportunity to move, and when it's time for me to take this new job and move, I need to give them an answer and be out there within 45 days, or that management position would have to be given to somebody else because they're opening a new plant, and I'd have to make a quick decision, and I don't want the house to be holding me back because I don't want to have two mortgages, right? And I'll say, well, a lot of people, when they contact us, they're comparing multiple options. And certainly one of those options is listing the property and going the conventional route. Was there anything about that maybe made our process or what we offer more appealing to you? And they're going to give you an answer. I don't know what the answer will be, but they're going to say what it is about the conventional process of selling a home that's maybe undesirable to them. And sometimes that's real, and sometimes it's perceived. And I'll give you an example of a perceived issue. A lot of people with real estate agents sometimes, I think, undervalue what a real estate agent brings to the table. And they may, almost out of spite, try and sell their home on their own to prove that they did it, even if they get $40,000 or $50,000 less for their property because they saved $15,000 in real estate commissions. They almost want to stick it to the realtor. Oh, I sold my house without you, right? Well, yeah, but you got $50,000 less. Yeah, but I didn't pay a $15,000 commission. When I'm over here thinking I'd gladly pay a $15,000 commission to get $50,000 more, right? That's real. Unfortunately, I think people don't appreciate the value that they get out of paying a real estate commission. So they may just be trying to circumvent paying the commissions. This is a big one where they'll say, well, I just want to sell it as is. Now, remember, because we did another interview where I talked about the ideal novation property is in really good condition. That's quite frankly what makes it not a good wholesale fit, right? But why do they want to sell as is? Jose, if somebody came to you as a real estate agent and said, hey, I want to sell this as is, and you're looking at it and it's turnkey, how would you handle that as a real estate agent? What would you say to them? They go, hey, it's really important I sell it as is. How do you handle that as a real estate agent?
I would just say something along that won't be a problem. We can just put it in the counter offer and we'll sell the property in as is condition.
Cool. So what positive or negative impact does that have to the marketability of the home?
So I think if you put it on the market, in the marketing remarks, and you put as is, some of the buyers may be like, well, why does he want to sell it in as is condition? Is there something that they're not telling us about the property? I think that if you just market it like a traditional listing, but if you just put it in the counter offer, hey, property to be sold in as is condition, sometimes it doesn't have as much of an impact. But I think some of the buyers, regardless, are going to have is there something that they're not disclosing to me or something that they're not telling me? But some of the other buyers, as long as they have their inspection contingency, some of the other buyers may be okay if their agent explains it to them the right way, that they still have their inspection contingency.
Yeah. So, by the way, if you're thinking about selling a property as is, and I would suggest using somebody like Jose because he's obviously thinking more advanced than a lot of the real estate agents that I've talked to that would list it as is, right? And I think what they don't realize is that you are, in fact, some people, their interpretation of that will be there's a problem. I need to account for some type of issue. And then how's that reflected in their offer? They're going to pay less.
Usually lower. Yeah.
Right. So let's say it's a 10% difference and you're selling $1 million property. That as is comment lowered the value, even though it's the same size, it's the same location, right? If it has an impact of, say, 10% on $1 million property, it's going to shift the value by $100,000, right?
You want to know the interesting thing, Eric? In California, you don't even have to put as is on the counteroffer because the contract, the RPA, the residential purchase agreement, already has an as is stipulation in the contract already. So it's almost like just being redundant.
You have to opt out of as is, not opt into as is. So in Pennsylvania, it's the opposite. Every contract already has every inspection contingency. You have to disclose as is, or there's a default inspection contingency that they have in Pennsylvania. So, and then even outside of the contracts, like I think to your point is when they see as is, it automatically shifts their beliefs or maybe their perception about the property. So what am I saying that for? When a seller comes to me and they want to sell it as is, and it's because they don't want fallout. They don't want unpredictable, negotiating back and forth around repairs, even though there might not be any. They're saying one thing and the buyer is hearing something different. Like the seller may mean convenience and predictable, and the buyer hears money pit, problems, issues, deferred maintenance, right? And then that creates a gap. So my point is that you'll have a lot of people that have a perfectly nice property they want to sell as is, and there's limited risk on the backside of selling it with inspections and appraisals. But there's something about their perception of a non-as-is transaction that the seller says, I'm not willing to participate in that. And then the buyer sees as is and says, I'm going to pay less. Or maybe I have FHA financing and I can't buy a property that's listed for as is, even if I get a home inspection, because unfortunately, if the appraiser comes back and there's 4 or 5 things that need done by way of the appraisal, my loan won't get approved. So we see this gap between when a seller says as is and how a buyer interprets that. So when someone says as is, it creates the opportunity for us as the investor to bridge that gap and absorb that potential risk. And now in that instance that I gave you on $1 million property, I may make $100,000. That's just the difference in value. Now, if the seller sees more of a value in that than the normal 10%, I may be able to get it down 20%. So now there's $200,000 worth of equity that was created because I have a seller that wants to sell as is and a buyer that won't buy as is. And I bridge the gap. So that's kind of the mechanics of what I was talking about. But here's how the pitch goes. I say, hey, Jose, it seems like you and I have come to a bit of a crossroads. I feel like I've come up as high as I can while offering you the speed and convenience that you told me that was important to you. And I kind of get the sense that you're not coming down anymore. I've tried 3 or 4 times here to see if I can create some flexibility in price. And if you say no one more time, I think you're going to turn blue in the face. So I'm going to make a suggestion if it's okay with you, and that instead of us trying to pull each other in an opposite direction, why don't we see if there's a compromise somewhere in between? They'll go, well, what do you suggest? And I'll say, well, I don't know if you know this or not, Jose, but in real estate, in my business, 9 out of 10, 8 out of 10 sellers that I meet to and make an offer tell me no. I have some long days. Like every morning I wake up and I know if I go talk to 10 nice folks like Jose, 9 of them are probably going to tell me no. Even though they like what we offer, right? They believe in our process. They like the convenience, but the money just doesn't work out, right? The math isn't mathing. I like you. I think you got a great house. I've tried my best to make a deal work here, and I can't do it. Doesn't mean you're a bad guy. It just means you and I haven't been able to come up with a deal that works for both of us. So I got pretty frustrated, right? And I would talk to my business owner. I would talk to my boss. I talked to my partner. I said, the majority of the time when someone decides not to do business with us, it's because we simply can't pay enough. There's got to be a way for us to fix that. How do we pay more money and still be a smart investor? Well, and at first I got laughed at. Everybody told me that was crazy. You can't pay too much or pay more and be a smart investor. You got to pick one or the other. You can either make the seller happy or the bank happy. You can either make the seller happy or you can make your investor happy, Eric. You can't do both. And I'm just, you may have gotten the sense I'm a bit of a bulldog. I don't quit until I get a yes. So I just really kept working at it. And what I came up with is something that we've developed now, and we've been doing it for several years. and it's called our Equity Protection Program. And it was designed specifically for situations, I think, sort of like what I'm seeing with you, where you like the speed and convenience of selling to an investor, but you don't like investor prices. So what we did is we built in the speed and convenience very similar to what a cash buyer investor would normally offer, but we're able to come up pretty significantly in price, maybe even closer all the way to the number you've indicated to me. If I can just simply get you to compromise on two little things that don't sound like they're too big of a deal to you. You had mentioned earlier when we talked about how quickly we could close, sometimes in 7 to 14 days. You had said to me a couple times, Eric, that's cool, but I'm in no hurry. So I'm thinking this may be a good fit for you because the Equity Protection Program takes about 60 to 90 business days. Are you still thinking that you're not in a hurry?
Yeah, I mean, I would have flexibility on that. If it meant a higher price, I would be 100% open to 60 to 90 days.
Gotcha. I'm glad I was listening there because that's an important part of what we would do. And then what I heard you say a couple times is like, Eric, the speed and the convenience and all that sounds good, but I'm not going to give it away. Right. And I think that's how we ended up here, where the price is maybe more important to you than the speed. And at the end of the day, I think I can give you most of what you were looking for when you called us in the first place. If you can just be flexible with me on the 60 to 90 business days. And then the second little piece that I need some flexibility with is reasonable access. That just means that I have the ability to bring potential buyers in here so that I can shop really one of 4 buyers, right? So I want to be your buyer. Is that okay if we continue working down that path?
Yeah. Uh-huh.
Okay. Now, what I have to find is eventually a buyer to buy it for me, right? Like I think we've covered those bases. That's how I make money. I figure out a deal that makes sense for you. I got to make sure that works inside of my investment strategy. And then eventually I got to go find another buyer to buy it for me so that I can squeak out a little bit of profit out of this deal. So what I'd like to share with you is there's really one of 4 buyers that I'm hopeful that I can position your property in front of, that they'll buy it for me and I can make a little bit of money. Number one is you said it was really important you sell it as is and you didn't pay any realtor commissions, right? I'm going to take the property to the open market and I'm going to position it in front of, with interest rates climbing and the real estate market that we're in now, a lot of folks out there want the security of getting a bank appraisal. There may be borrowing money to pay for the property. And a lot of folks want to get a home inspector in here, but I heard you loud and clear that you don't want to deal with any of that. And Jose's going to go, yeah, I'm not dealing with any of that crap. So I'm going to put it out there. I'm going to say, hey, bring your inspectors, bring your appraisers. It's a gutsy move on my part. But I feel pretty confident if something pops up, like sometimes on homes like yours, buyers will bring me like a page and a half of crap. And it's like a GFCI or a handrail or the garbage disposal or the light switch for the pole at the end of the driveway doesn't work. And that's super annoying a lot of times to the average homeowner. They don't have access to handymen and plumbers and a dude that handles insulation. I've been around for a while. I have a lot of really strong relationships with contractors. I can get that stuff done for a couple bucks and it's not much of a hassle for me. It's actually how I earn a lot of my money. Sometimes doing big renovations, sometimes it's installing handrails. I'm not above that. I'm happy to do that for you to make this deal work. So now if I bridge that gap, they'll come in and bring their inspector. They'll pay me a little bit more than what I had to pay you. And I make a couple bucks even after I fix that stuff and pay the agent. Number 2 is I'll have people that come in here. They love everything about the house, but they want a brand new kitchen. And they'll say, Eric, you're asking $400,000 for the house. I'll give you $450,000, but I want a brand new kitchen because I know the kitchen that I want costs $50,000. And my wife insists that we have this kitchen in our new house. Now, the cool thing about that, Jose, is because of my realtor or my contractor relationships, that $50,000 kitchen may cost me $40,000. Now I've created a little bit more equity in the deal for me because of my contractor relationships. Number 3 is they may want a kitchen and let's say they want a bathroom added to the finished basement. Same deal. They'll say, hey, we'll give you $460,000 because we know the kitchen and the bath cost $60,000. It may only cost me $40,000. Now I've squeaked out. Now, I don't want you to freak out. You're thinking I'm going to be putting a new kitchen and a new bath in your house. We would never consider doing any of that until you and I have successfully gone to settlement. You've gotten paid, I've gotten paid, and then they're basically paying me like a general contractor after the fact. The 4th option is they want the house completely remodeled. Now, I really don't want anything to do with these transactions, but every once in a while, Jose, someone will come along and make me an offer I can't refuse. They want it completely remodeled. They want to pick out everything, but they're willing to pay an arm and a leg. again, what I'm going to do is make a little bit of money on the sale of the home. And I'm hopeful I'll make most of my money on possible renovations that they pick out that are custom. Again, I wouldn't do any of that until you and I settled up. We went to settlement. You got paid, I got paid. And we generally do all of those renovations after the fact. So what I'm taking is a calculated risk today to give you your $350,000 in the hopes that I can go out and find one of those 4 buyers in the next 60 to 90 business days and negotiate a deal with all those inspections and all those appraisals and all these possible renovations and paying my real estate agent, paying their real estate agent, still give you your 350 and me squeak out a couple bucks. So that's how our equity protection program works. It's a ton of additional work on my part, but that's what it took for us to help an extra 2, sometimes 3 more sellers out of the 10 that call me every day. And our people absolutely love it. Now, I'm getting ahead of myself. I'm not even sure if your property and your situation would qualify, but I'd be happy to check in if you thought that something like that might be workable for you if it meant coming all the way up to 350. What do you think?
Well, I think at 350 would make a lot more sense. What would be required on my end?
Really just 2 things. We would eventually authorize an agreement where you and I document everything we talked about here today. That way there's no confusion about expectations. And then over the next 60 or 90 business days, I'll just need reasonable access and we can talk about that. Is the property still vacant or are you still living there? And they're going to,
No,
whatever it is, it's vacant or it's,
yeah.
okay. So I know you said convenience was in, so we'll work around when we, I would typically put a lockbox here and I would need to bring people sometimes on short notice. Now, again, I know that's not your favorite thing, but again, we're coming from 300 up to 350. Is it worth the $50,000 to work with me a little bit on some showings a few times a week?
It is. I just don't want a bunch of people through here. Any idea how many showings it would actually be?
Yeah, it's a good question, Jose. I hope that it's 1. If I can bring 1 person here and work out a deal that works, I'm not greedy. I'm just going to try and get us across the finish line. But I can tell you the one thing that moves that up is like if you and I made a deal at 330, I'd have to bring less buyers than I'll have to bring if you and I make a deal at 350. So if at any time it feels like there's too many showings, I'm happy to talk about how price and you and I making a deal at a lower price, lower showings, higher price, higher showings. Does that make sense?
Got it. That makes
Like
sense.
if we made a deal at 300, Jose, I'd never have to come back here again until you moved out. But I think you and I have sort of exhausted that option. This is really the only possible way to get you closer to that number that you're looking for. And I promise I'll communicate with you at any time those showings feel like they're happening too often or too late or too early. All you got to do is let me know and we'll continue to work around your schedule. The second thing I need from you in order for us to come up to that $50,000 and get you moving on to where you wanted to be is just permission to take it to the open market. All of those buyers that I talk about, I need to let them know that it's for sale. The good news is they're going to call me about any questions. You and I have a deal. We're going to settlement in 60 to 90 business days. You're not really going to have to deal with any buyers or any of that stuff until you and I get to settlement. But those are the 2 things that would allow me to come up to that 350 number that you were looking for and get you to settlement in the next 90 business days.
Does open market mean that I have to put a for sale sign on the property?
Now, we don't have much success with signs. The majority of people start their search online. So we're going to leverage all of our social media, all of our digital, and we actually use, there's a multiple list service that we often take advantage of where all the real estate agents will look for that. And then they'll call me with questions or, any opportunity they want to have access to the property. They'll contact me, but we don't need to put a sign.
So, what would be the benefit of me participating in this program versus just going on the MLS myself?
Yeah, that's a great question. If you were looking to get full market value, I would suggest you actually go the route of working with a real estate agent, potentially courting those 4 different buyers. I'll even introduce you to the contractors that I work with so that if someone comes along and they're willing to pay you a fair price, but you have to work through that inspection and appraisal and commission and renovation, I'll be happy to connect with those people so that you can squeak out the extra couple bucks, or I can handle all that for you and you're guaranteed to get your 350. But honestly, if you want to get full market value, because I'm going to make a little profit by doing this, if you want to get full market value, I would suggest that you take it to the market yourself.
Got it. So this way, I'm basically guaranteed the 350, regardless.
Yeah.
is there any situation where I wouldn't get the 350 for the property? Like, is there anything that would happen where what happens if you don't find a buyer for the property?
Yeah,
And
so that's a good question. There's two situations. Number one is I have to make a decision today. If you tell me you want to move forward, I have to make a decision that we're going to move forward. Then there's two very important things, and I'm glad you asked that question, and we're going to cover that right now. Number one is there is typically in these deals a due diligence, an inspection contingency, things of that sort. I would have to include that language in this contract if I feel that I need some mechanism to protect my interest over the 90 days. And what am I saying? I mean, if I get caught up in the hype of making a deal with you and I agree to 350 and I'm not 100% confident that I can show up with $350,000 in 90 days, I'm going to put a clause in the contract that says there's a due diligence period or an inspection period. How would something like that make you feel?
well, I think it just depends on how long it is. Like, obviously, if it's 90-day inspection period, then I wouldn't be okay with that. But if it's something reasonable, maybe like 10-day inspection period or something like relatively low, then I think at that point I would be okay with that. I just wouldn't want to have it tied up for an extended period of time if it's not guaranteed, meaning. And is there a way? Is there also a way where we can eliminate that completely? Because obviously that would make me feel a lot more comfortable with this agreement as well too.
Yeah, these are all great questions, and I love where this is headed. We've now taken what felt like a $50,000 gap between you and I, and it feels like now we're just simply negotiating the difference between 14 due diligence days and 30 due diligence days. I feel like we've gotten to a much more manageable place. I'm happy to answer all of those questions for you. If you feel like we're moving in the right direction and me being able to come up to that 50,000, I'm happy to work through that. Like, and ideally for me, I'd love 90 days of due diligence. If that doesn't work for you, then we got to find a place between 0 and 90 that I feel comfortable making a decision to move forward today, and you feel the same.
Well, my
So
concern with the 90 days would just be that there's no skin in the game. I almost feel like, because it's almost like an exit clause where you can just exit at any point. Um, so yeah, no, but I think you're right. We are moving in the right direction. Like, meaning, like, it is something that I'm open to it. I think the other question I would have is how much of a deposit would you be putting down as well too?
yeah, those are all great questions. And again, at any time, if the due diligence, the deposit, the certainty feels like it's too much, I will stand behind my original $300,000 offer. And again, I know we've crossed that bridge a couple times, and you've said that just didn't work for you. But if at any time certainty starts to get back in the driver's seat and take over in exchange for money, just let me know. And we can certainly go back to the $300,000 original offer with no due diligence, the ability to close in 30 days, and no reasonable access with no permission to take it to the open market. Just keep that in mind. I don't want you to feel like because now we're talking about the equity protection program that I've taken my original offer off the plate. I'm here to give you two options. If you choose one, that's awesome. I'm okay with either way you go.
Got it. So that
So
your
what happens?
300,000 would still stand basically. In other
Yeah.
words.
So here's what happens. It's a hidden secret. I'm off the role play now for a second. What happens is, because I think this is a pivotal part, when you get to this part, there's a belief that I have is that when you give somebody, I'm a big fan of Dr. Cialdini. If you've never read his books, he wrote Persuasion, he wrote The Art of Influence, and he talks about like how bias and something called a price anchor has an impact on our negotiations. And when you give somebody one option, you often force them to seek a second opinion. When you give someone two options, you give them permission to pick one. It's like, hey, I'm not going to put any pressure on you. You can have option A, and if that doesn't work for you, I'm fine if you take option B. There's absolutely no pressure for me, Jose. Meanwhile, I'm pressuring you to pick one of the two, but it feels less sleazy because you gave me two options. You can buy anything you want from me. I don't care if it's one of these two things, right? But if you give them three, sometimes you confuse them, right? Like a confused mind will not decide. So where I found the sweet spot is, even if you never did novations, you could make it the least appealing program in the world, but you've given them a second option. Because what you said to me is speed and convenience is not as important as the money. I want more money. So, okay, I can give you more money. Why don't you finance it for me for 50 years? Well, I'm not doing that. Well, that's one of the ways that you can get the 350 that you're looking for. And Novations is just another one. Plus, we can execute on it. Because remember, if you go back and you watch the previous interview that we did, the number that nobody talks about in real estate investing and wholesaling is generally this figure of CCRV, or current condition retail value. We look at current condition value, but that's normally on fixer-uppers, and that requires us to renovate it to create enough spread for us to be able to sell it. But what I'm suggesting, what I've found now, when I say found, I've done over 1,200 of these transactions. So what I just gave you the pitch, this conversation is not something I think will work. It works. It just does.
Even in my head, like in my head, I'm like, okay, I'm gonna try to be a little bit resistible. But the way that it's pitched, it's very hard to do that because it doesn't raise any red flags, and it gives people options as well too. So it's like, look, and you're being transparent as well too. Also, I like the name of the equity protection program. How did you come up with that?
It just is what it is. Like, what are we doing? We're protecting more of their equity in the transaction. And it really started for me. And I remember this pitch has evolved over the last like 15 years that I've been doing. And I used to just say, hey, Jose, there's time or money. You can pick one. Right? Like, I can give you more money, but I need more time. And that's how it started. And I'll go, well, fine, give me the extra 50 and you can have 6 months if you want it. Because what happens, this is the reality, right, is a lot of times we impose our beliefs or assumptions on the seller. Like, I have people all the time go, yeah, but they don't want to deal with showings. Are you sure?
How do you know that?
Or is that just what you put in your marketing message because you don't actually know what's of value to them? So you say cash as is, no showings. Matter of fact, we're in a mastermind together. There's a gentleman in there, Stuart Denyer with New Western, that does like 10,000 transactions a year. And they did a social listening exercise. And like 75% of sellers, when they saw as is, they think scam. When they hear cash, they think brown paper bag, shady operator, right? But we just keep saying cash and as is, and we think that means quick and easy. But that's not how it's interpreted by sellers anymore. You should actually just say, because cash assumes typically, right, no banks, no appraisals, all that stuff. What we're really trying to say is a sure thing. So when you're marketing, you should stop saying cash and you should say, would you like a sure thing? You shouldn't say as is. You should say, would you benefit from a speedy settlement? Right? The language has changed from back when they started saying cash as is 20 years ago and what people assumed that meant. Because you don't actually get cash at settlement. You get a wire or a check anyway. So it's not real cash anyway. Right? We're just saying it's a sure thing. There's less contingencies attached to this offer than someone that may need to get a mortgage. So just say that. But
I think it's important as well too that whenever you say certain things, understanding how the other side perceives it as well too, which I think you've hit the nail on the head twice on this interview, where the as is, what it means to the seller and what it means to the buyer. What do they really mean when they say that? And I think if you're able to understand that, you're able to present it better.
Yeah, I had it. It's actually manufactured equity. When you understand the difference between the seller's intentions when they say as is and the buyer's interpretation, it creates equity. And if you can fill that gap, you can benefit from it. And you didn't do anything wrong. You didn't pull equity from this person. You said, hey, I'm going to serve as an insurance policy. The seller wants a sure thing, and that means as is to them. And the buyer wants a sure thing, and that means an appraisal and a home inspection and a mortgage contingency. And I'll say, hey, I'll act as an insurance policy. You ever see these golf tournaments where they have this win a new car on a hole-in-one? You know what they buy? An insurance policy. They get an insurance policy from a company that insures that contest that will cover the cost of the automobile in the wild chance that someone will make a hole-in-one. We act as an insurance policy between a seller who wants as is and a buyer who won't buy as is. And that creates an equity gap, and we get to benefit from that. And if you think about it, like if everybody was selling their property as is, cash only, all of these like conventional finance, FHA, VA buyers would have no homes to buy. There's already an inventory. So we're actually bringing financeable, inspectable inventory to the market that otherwise wouldn't exist.
Yeah.
Does that make sense?
Let me go over like a question that I think in my head would pop up. Okay, so let's say we come to an agreement at 350, right? For the property, and then I call the office next week. I'm like, hey Eric, I know that we agreed at 350, but I see that you have it listed for 450. Are you making
So Jose, hold on. So
$100,000?
remember what did do you remember the one of the four options? So the other thing in the listing that we do, Jose, is we put in there an agent remarks and public remarks. Be sure to ask agent about possible renovations. So do you remember the conversation where I said, hey, I actually used that number. We may put a new kitchen in. We may do a new bath. We leave some flexibility in there. So what I've baked in there is the possibility that someone may ask for those renovations. I'm prepared to do that if that's what it takes to get the deal done.
Got it. So do you mind going over like a pitch on the, or not a pitch, but like going over the contract with me, like what's included in the contract at all?
No, not at
And
all.
almost like an explanation of that?
Yeah.
Like
So
what
like
you're
the
saying?
contract for anybody that's doing a normal purchase agreement, particularly if it has any assignment language in it, the novation, you use the exact same agreement. You just put in there, buyer reserves the right to novate property. That's it. Now, legally, that's what you have to put in the contract. But when you go over that, you can't just like glaze over it, not explain it, right? And that's what one of the things I love about Novations is it forces all of this conversation to the front end of the transaction. Because in normal wholesale real estate, this conversation you're talking about, profit and disclosure, happens at settlement or never happens at all. And it's basically people operating in the gray. That's not everybody. But there are certainly people out there, whether they're agents or wholesalers or investors, that could do a better job of disclosing, and they sort of hope for the best and get all the way to settlement. If someone throws a fit, they go, hey, listen, you can get your check now or we can fight this out in court. And some people out of frustration will just settle, and they have a crappy taste in their mouth about how the transaction went. And, there's certain people that'll live with that negative experience with a client in exchange for the money they made. In our version of Novations, we are super transparent on the front end. Like, again, I changed some of the language. It's just because understanding how people respond to things like MLS and listings and showings. I'm being very transparent about what reasonable access means, right? I said lockbox. I'm going to bring people here. We're talking about that. I just understand that certain words trigger people to have a negative response, particularly if they said something like, yeah, Eric, I'd just like to avoid the normal listing process with a realtor. Now, you or I, if we don't ask good questions, we may make a bunch of assumptions about what that means.
Mm-hmm.
Some people might go, well, my last experience with a realtor, they locked me into a 1-year contract and I had a horrible experience and I couldn't get out. So for them, avoiding that may mean, hey, we're going to write a 30-day agreement. If I don't perform in 30 days, Jose, you're able to walk away, no problem.
And then whenever you said that you market it with ask about renovations, is that on the MLS on the public remarks or private remarks, or where does that go?
Both.
Oh, okay. And that's basically it right there. If you're doing that, and then at the time of signing the listing agreement, they're signing the original listing agreement as well too, so they know what price you're going to come on the market
Yeah.
too, right?
Yeah.
Yeah.
And again, we've talked about like I'm solving a set of challenges or problems, or I'm getting them closer or all the way to where they want to be. I think there's also this big misconception that people aren't okay with us making money. Like everybody always asks, well, what do they say when you say it listed for 450? They should pat me on the back.
Mm-hmm.
Like I'm going to go out and earn that $50,000. I had to generate the lead with them. I had to walk them through how the transaction works. I got them to a place where they felt comfortable with the deal that we made. I disclosed I'm going to take it to the open market. I let them know I'm going to negotiate with 4 potential buyers to land at a place that I could not only satisfy the buyer, but pay the list agent that's representing me and the buyer's agent that's representing them. And I'm going to fight like heck to get through appraisals and home inspections. And if I do all of that, Jose, I might make $100,000. If that bothers you, you and I should not do business today. You can start charging 10% commission tomorrow.
Mm-hmm.
There's some people that pay you 5%, 7%, 8%. There's other people that pay, 4%. It's the amount of money that people will permit you to make is in direct correlation to the value that you bring to the transaction. So if you go in and this is the problem with a lot of folks, is they go in, they spend 20 minutes in a listing presentation, they spend 20 minutes in a sales appointment, and then they give the person the pitch and they walk away and go, I didn't get the listing because they won't pay 7%. No, you didn't get the listing because you didn't build enough value to justify you getting 7%. It's not people don't complain about prices until they're dissatisfied with service. How often does someone go in and go, that was an amazing experience, they ripped me off? It doesn't happen. Mm-hmm. Price only comes up when you've brought nothing else of value to the transaction. In most cases, there are some people out there that are just cheap, just the way they are. And they'll struggle through. What airline will you fly when you go to CG?
To San Diego. We drive, but to Florida, my wife picks it. But we've done American, we've done.
Why not
United,
Spirit?
We've done Delta, we've done Spirit, we've done whichever one kind of has the.
So, if you fly Delta first class versus Spirit, is there an anticipation in the different level of service that you may have between those two?
I'm not even sure, to be quite honest.
What's the airline you always see on Facebook where people are complaining about getting stuck in an airport and waiting for 5 hours? What's the airline?
Probably
it's
no?
Yeah, right. Like people have sometimes they have a bad experience. People pay a premium for first class. They pay a premium for Southwest Business Select. They pay a premium for American Airlines. They pay a premium to have access to these lounges at different airports. Mm-hmm. They know that they're paying more for that than they could Spirit or, C-37 boarding position at Southwest. They don't. Mm-hmm. They don't go to first class and go, these seats are awesome. The meal on the plane was great. I got a drink every time I wanted one, but your prices are a ripoff.
Yeah.
Right. So this conception that people will complain or not allow you as a real estate investor to make money on a wholesale or a novation is based on a failed premise, right? You have to provide value first and then collect your fee, not collect your fee first and then provide service according to the fee that they pay you. If you always provide service that feels like it's worth $100,000, no one will ever complain when you make $50,000 on a novation. It's skewed to their advantage.
Now, I know that you mentioned that in some cases, there will be some work to the property, and that work will be done after the close of escrow. Does that ever happen, or?
Very rarely. Really? Yeah. But I'm being honest when I say if someone came along and offered me $40,000 to put in a $30,000 kitchen, and that's what it. Now that's based on today's market, right? Now, if inventory starts increasing, I may have to do more of that. But in today's market on these style properties, most people are not. They may ask me about it, and I'll say it's $40,000 for a kitchen. Like, I don't want to do it. My buyers will handle that after the fact. Or they may ask me for a referral for a kitchen supplier. But the terms that I'm negotiating or I'm requiring in order for a buyer to get that for me, they often say no. But now I've got them into the house. I've created an environment to where they're interested in the property. I've removed the potential renovations from the deal, and all I need is one buyer, right? But the biggest thing that I've done is that, hey, ask about potential renovations. So if the house is a little outdated, they'll look at it, and the agent will say, hey, it says here the seller may consider doing some repairs. They're offering inspections, right? They're fine with it not being as is. Let's go look at this. And in most cases in my market, like our median price is, I think, like $240,000. If you pull multiple zip codes between $200,000 and $300,000, there's often zero homes available. Like not a few, not very many, like zero.
Yeah.
So when you bring a property, again, you got to remember a good novation property is mechanically sound, slightly outdated cosmetically. So when you have a property that's at or around the median price, that's solid mechanically, slightly outdated cosmetically, and it's the only or one of very few properties at or around the median price, it
It's
sells
gonna sell
quickly.
right away. Yeah, it's going to sell right away.
Yeah.
Yeah, and a lot of times it's going to sell in as is condition without you having to do the work. I almost feel like that even helps them be like the fact that you're offering to do any renovations. It helps them be like, oh, well, he's not really making $100,000. He could only be making 50, or he could only be making 20 or 30. And then whatever you're able to negotiate, you're able to just keep the difference or the margins basically. So if you're able to sell it as is, kudos to you. You got it sold as is. But if you have to invest, then you're willing to invest as well too.
Yeah, we would not do it. And then sometimes on FHA, VA, there may be condition reports that come back where I have to like paint a garage because it has peeling paint, right? And that's the best because I spend like $1,000 painting a garage, and the seller goes, "He told me you might have to do." Man, I'm glad I didn't have to do that stuff, right? And then there's even more of a gap between. Hey, I'm so glad I sold it as. Yeah, I didn't have to mess with that. And then like the plumber's in there fixing, the guard. So we actually hope that there's a couple repairs that doesn't cost a lot of money, but it further, I think, shines the light on the value that we bring to the transaction when that happens. I mean, it's also nice when there's zero repairs and we don't have to touch anything and we make, a couple bucks, but yeah.
Whenever there is repairs, it kind of almost helps in a sense, be like, oh, well, like they took care of all the repairs on the property as well too.
And sometimes we get repairs back and we don't make the deal and there was hidden issues and the roof's bad and there's mold in the attic and that's a hassle too. And we don't make the deal and it kills a buyer's deal. And we go back to them and say, hey, I know we thought we were going to close in 31 days. Good thing we had a 90-day agreement put together. It went back on the market. Go, what happened? And they turn into like cheerleaders for it. Come on, man, you'll get it sold. Like it's crazy, right? Like then you actually work together to get it done. But we have deals that we lose sometimes because you know how home inspections can be. Like everything looks fine to the buyer, seller, and the list agent and the buyer's agent.
Yeah.
And the inspector comes in there and sometimes make a bigger deal out of things than maybe they should. It doesn't always go well. And by the way, people always go, well, why wouldn't I list it or blah, blah, blah. I found that a really good closing percentage for good novation properties with a seller that's open-minded is about 20%. So if you have 10 people that you pitch a novation to, 2 of them saying yes is a win. 80% of them are still going to say no. But now you were closing, say, 10 or 15% of the original 10. You've added on 1 or 2 more deals. It will double your closing percentage. If you're a wholesaler or a fix and flipper and you're only making 1 offer right now, generally we're seeing novations will double someone's closing percentage.
Do you ever bring it up, the actual term that it's called the Novation Agreement?
Only when we're going over the document because it doesn't mean anything to people. Like, that's where some people will come to me and they hear these interviews. And I had someone yesterday that messaged me on Instagram. It was like, I need your help, man. I've been pitching novations for a month and I can't figure it out. And within 5 minutes, I said, give me your pitch. And it was butchered. And it was literally, they didn't start at a wholesale offer. He was saying things like, well, I can novate it for you. You ever heard of a novation? The seller's like, no. And he's like, well, we'll follow up with you in a couple months. And dude, of course, like most 95% of real estate agents and investors haven't heard of novations. What the heck makes you think that John and Mary Smith did? Right? So he just had his pitch all wrong. He took the way he understood novations and tried to pitch that to the seller. People are less mechanical and they're more emotional. How does this equity protection program solve the set of problems I told you I'm looking to solve? That's what you have to figure out. You got to understand the mechanics of the equity protection program, and you got to present it so that it directly solves the problems they told you they wanted solved.
I love it, man. Cool. Any final words on this, Eric? And by the way, I love the pitch. I think it was excellent. I love the equity protection program, and I love how it's a solution as well, too.
Yeah, I would say last words would be the most successful. I've taught this now to over 400 investors nationwide. The most successful people don't nail the pitch, right? They're pretty good at it. They're not the best or maybe, most well-spoken salesperson in the world. The most successful people with novations and salespeople I've ever met have the discipline to ask for the sale every single time. So what I've found is the people that I've taught this to, they make a wholesale offer, seller says no every single time they pitch a novation. Let them say no. Too often people come to me and they go, I've been doing novations for 3 weeks. I haven't got one yet. And I'll say, how many appointments did you run? 40. How many did you buy wholesale? 8. What about the other 32? Well, I only pitched novations twice.
Not gonna.
No. So the discipline to make the offer each and every time is the single biggest key that you'll have to having success with novations. You gotta roll it out every single time. Let them say no.
I love it. Now, Eric, if somebody wanted to get in touch with you about coaching them, or somebody had additional questions about Novation, what's the best way for them to do that?
I generally advise people to follow me on Instagram. It's Eric_Brewer_invest. I do stuff like this role play, give away little tidbits. I did a case study today on my social media about a Novation deal I got literally yesterday. We bought for 70 and I made $67,000 profit on it. And if you look at the way that the lead came in, 95% of people in my business would have never attended the appointment. It was a really nice house. There was no real signs of motivation or distress. And because we do novations, we attended the appointment and we uncovered all kinds of opportunity there that wasn't visible over the phone. So I wouldn't even encourage you to go to the website and sign up. Follow me on social media. You'll get a sense of these deals, how many we're doing. I do things like role play and the pitch and overcoming objections, how to get it listed with a realtor, how to overcome objections from your title company. I handle that stuff and cover it all the time on my social media. Follow me for a couple weeks. Check out some of my videos. If then you think you want us to help teach you novations, there's always a link in my bio. So I would advise you to go follow me on social media. All you can do is message me on social media. I'll send you an example of a webinar that I've done recently that walks you through like actually the mechanics step by step of how to do a deal from start to finish. But that's a great place to start.
I love it, man. Well, I want to say thank you, Eric, for coming on. For our viewers out there, we had Eric Brewer, how to pitch a Novation Agreement, which it's the best Novation Agreement pitch I've ever heard. If you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode will be helpful to somebody, make sure to hit that share button. Thanks again, Eric, to our viewers out there. Until next time.